In today's video, I wanted to take a look at probably the number one most requested dividend stock that I get on this channel. And just by taking a quick glance over its performance, there appears to be a lot of things to really like about this stock. For one thing, it currently offers investors an incredible 16.13% dividend yield according to Yahoo Finance, which as of the making of this video makes it the highest paying dividend stock out there that pays dividends every single quarter. Now there are other companies out there like Suro that claim to have even higher dividend yields, but when we look at their distribution history, we can see that it pays very irregularly, and this throws off the dividend yield that Yahoo's providing us. But the stock we're going to analyze has consistently paid dividends every quarter since 2012, and they've even been able to grow it over the years. According to Seeking Alpha, this stock's dividend yield has a 5-year growth rate of 5.95%. Now, most insanely high-yielding dividend stocks I cover are very rarely ever able to increase their dividends like this, which is because a lot of high-yielding investments like business development companies and mortgage REITs, among others, are required to pay out most of their earnings to shareholders that they aren't left with too much money left over to grow the business. So the fact that this stock has not only been able to maintain this high yield, but also slightly increase it is pretty impressive. What's also pretty impressive is the company's ability to significantly outperform during specific times. A $10,000 investment into this stock 20 years ago would leave you with significantly higher returns than your typical S&P 500 index fund. $10,000 worth of stock in this company 20 years ago would now leave you with $161,306.77 compared to $59,146.03 with the Spider S&P 500 ETF, large part in thanks to that massive dividend that this stock pays. But while there's a lot of things to like about the performance of this stock, there are some pretty significant things that investors need to keep in mind if they're seriously considering investing in this company, which includes special tax considerations as well as the sustainability of this company going forward. Plus, it's overall a very difficult company to analyze and understand because of its massive size. So with that being said, let's take a look at this company and try to see what the future holds. The stock I'm talking about is Icahn Enterprises, which is ticker symbol IEP. This is an American conglomerate that's controlled by billionaire investor Carl Icahn. Through its subsidiaries, this company operates in the investment, energy, automotive, food packaging, metals, real estate, home fashion, and pharmaceutical sectors in the United States as well as internationally. Icahn Enterprises LP was incorporated in 1987, and today they're headquartered in Sunny Isles Beach, Florida. Now there's several reasons why really analyzing this company is going to be a tremendous task. There's a really handy chart in their current investor presentation that shows just how extensive this business really is. As you can see at the very top, Icahn Enterprises owns Icahn Enterprise Holdings, which owns either the complete or the majority of 8 individual companies. That means in order to do a really deep dive and analysis of IEP, means that you'd have to examine every single one of these companies separately. To go really in depth into each one of these businesses would easily take hours of research. And what makes things more difficult is the fact that each of these businesses are totally different from one another. We'll go ahead and take a quick look at every single company that's a part of Icahn Enterprises, with the first being Icahn Capital, which is an asset management company located in New York City. The company manages equity and fixed income portfolios, and as of September 30th of 2021, Icahn Enterprises had investments with a fair market value of approximately $4.6 billion in their funds. American Real Estate Partners is an institutional fund manager and operating partner focused on office and mixed-use property repositioning and development in the greater Mid-Atlantic region. Since 2003, they've acquired more than 17 million square feet of real estate, and they're based out of Washington, D.C. PSC Metals is a company that Icahn is currently in the process of selling, but they're one of the largest independent metal recycling companies in the U.S. They allow consumers to trade in vehicles, appliances, aluminum cans, and more for scrap metal. They have approximately 30 locations around the U.S., largely in the Midwest and the South. West Point Home is a supplier of fashion and core home textile products that sells a wide range of home products, including bed sheets, blankets, pillows, towels, comforters, and mattress pads. Vivus is a biopharmaceutical company that's developed therapies for obesity, sleep apnea, diabetes, and sexual health. This company was acquired by Icahn in December of 2020 after they had emerged from bankruptcy. Icahn Automotive Group is the parent company of several businesses that are involved in aftermarket parts distribution and services. As you can see, they own the brand Pep Boys as well as Autos Plus, Amco, and Precision Tune Auto Care. Vizcasi Companies is involved in the meat processing industry. They make different casings, including plastic casings and fibrous casings for sausages and other meats. They do business in over 120 companies, and they have 11 manufacturing plants all around the world. Then finally, there's CVR Energy, which is a diversified holding company primarily engaged in the petroleum refining and marketing business through its interest in CVR refining and the nitrogen fertilizer manufacturing business. This chart in their investor presentation shows where the majority of their revenue comes from. So just by a quick introduction into each company, you can see how massive of an undertaking it would be to really do a deep analysis of Icahn Enterprises. Not only that, but you'd have to have a good amount of knowledge of all of these industries, which is something that I'm sure only someone like Carl Icahn could have. I can't say I know anyone who knows a lot about the meat processing and the pharmaceutical sectors. You'd need a small team to really dig deep into a company like this. I once read that owning this company would almost be like owning an ETF given how diverse its holdings are, and in some ways it even has some characteristics of a hedge fund, which I'll explain later. I feel like the best way to understand this company is to understand the man behind it, which is Carl Icahn. Carl Icahn is one of Wall Street's most successful investors and has been shaking up corporate America for decades. He's most well known for being an activist shareholder in which he takes large stakes in companies that he thinks will appreciate via changes to a corporation's policy, and then he pressures management to make changes that he believes will benefit shareholders. Some of you may remember during the 80s, he gained a reputation for being a corporate raider by profiting off the hostile takeover and asset stripping of Transworld Airlines. According to Forbes, he's currently the 43rd richest person in the world with an estimated net worth of $16.6 billion. There's several good documentaries on YouTube about Icahn if you want more information on his career and his investing philosophy, but the most important thing you need to know is that Carl Icahn is Icahn Enterprises. He owns about 93% of the company, and he's the current chairman. To invest in Icahn Enterprises is basically to invest alongside with Icahn. If you're really serious about investing in IEP, not only should you familiarize yourself with each company that's owned by it, but you should also do your own research into Icahn's investing philosophy. Know what Carl likes to look for when acquiring businesses and what he likes to avoid, and see if you agree with him or not. As if researching this stock wasn't already a daunting task in and of itself, right? You also need to understand the behavior and the personality of the person behind it. I feel like we're already pretty far into this video, and I haven't even mentioned the number one thing that I think will deter most people from investing in IEP. And what all investors need to understand is that Icahn Enterprises is structured as an MLP, or a Master Limited Partnership. This is a unique kind of company that's different from, say, a REIT, or a business development company, or even a closed-end fund. An MLP is a publicly listed limited partnership, which is a unique hybrid kind of structure that combines a partnership and a corporation together. People who buy shares of an MLP aren't considered shareholders like a typical stock, but they're viewed as actual partners of the company. This kind of business structure carries with it some very complex tax rules that you need to keep in mind. If you invest in a master limited partnership like IEP, you'll receive a tax form that you don't get from any other kind of investment besides an S corporation, and it's called a K-1. The purpose of the K-1 tax form is to report each partner's, aka your, share of the partnership's earnings, losses, deductions, and credits. These tax forms are notoriously difficult to handle on your own unless you happen to be a tax professional. And if you think you can get away from a K-1 by investing in an MLP in a tax-deferred account like in an IRA, depending on the specific MLP, you might still be required to pay certain taxes on this income regardless if it's in a retirement account or not. Now, if you're the kind of person who has their own accountant and you just hand over these forms when filing your taxes, or if you go to a business like H&R Block and have them do this for you, then it's obviously no big deal. But nearly all CPAs and tax prep businesses that I've come across do charge a premium to prepare your tax return if you give them a K-1. I'm not aware of how K-1s are handled if you happen to live outside of the United States. It could potentially make things even more difficult depending on where you live. But given the fact that you have to deal with this tax form and potentially pay more to have someone handle it for you, investing in an MLP doesn't make much sense if you only plan to invest a little bit in one. Like if you're only thinking about investing a couple $100 into a master limited partnership, then paying the extra $100 or $200 each year to have someone handle your taxes isn't exactly going to make it a worthwhile investment. As a side note though, if you do invest in a master limited partnership ETF, these actually don't send out K-1s to shareholders of these ETFs. Now that we have a general understanding of this company and what exactly an MLP is and how they function, let's examine this stock's performance as well as their financials and discuss some important considerations going forward. In terms of its share price performance, we can see that this stock's share price has pretty much flatlined between 2016 and now. There's been some spikes here and there, and it's reached an all-time high back in 2013, but as of the last few years, the share price hasn't exactly grown a lot. But as I discussed on my channel before, even if a stock or a fund is flatlined in terms of its share price, or even slightly declined, if it offers a massive dividend, then this can result in pretty sizable gains. Here's just a quick example of this. If you bought $10,000 worth of IEP shares exactly 5 years ago, back when this stock was trading at $61.64 a share, despite it dropping to $52.14 per share, which is a pretty sizable decline, the total return with those high dividends factored in was still really good. Don't get me wrong, there were better investments during this time, but it's the big dividends that still resulted in those gains. When combing through their financials, there were a few things that stood out to me. We can see over the last several years, this company's revenue has continued on a downward trend, and they reported a net income loss of $1.6 billion in 2020. For some reason, this company has had some really wild swings in terms of their net income. In 2016, they reported a loss of $1.1 billion, but then the next year in 2017, they reported positive income of $2.4 billion. At first, I thought that to uncover the reason for this would take combing through all 8 of Icahn's companies, but I also noticed something else while going through their financials. While looking at their balance sheet, I saw that book value for this company was also in the decline for the last several years. While looking through their investor presentation, I came across this handy timeline of recent acquisitions and exits over the last 10 years, and over the last decade, and especially within the last 5 years, Icahn has unloaded a lot of his companies. Since 2017, he sold off 5 companies and he only acquired 1, which is Vivus. In terms of acquiring more companies, Icahn is currently in the process of trying to gain control of Southwest Gas, which is a company that provides natural gas to over 2 million customers in Arizona, Nevada, and California. One more thing worth noting in his financials is that this company has a lot of cash on hand. According to their latest quarterly report, Icahn Enterprises has $1.95 billion in cash and equivalents. This seems like a large amount of money for a company to be holding on to, but now that we know that Carl is trying to acquire Southwest Gas and he's continued to sell off some of his other businesses, we can understand where this money came from. This indicates to me that at least for the time being, this company has enough money on hand to sustain that dividend at its current level. There's also another unfortunate thing that needs to be addressed about this company that I think all investors should take into consideration. As we've been discussing throughout this video, to invest in Icahn Enterprises is to invest alongside with Carl Icahn. But unfortunately, I think it needs to be considered that Carl is turning 86 next month. If he's no longer able to run the organization, that means someone else will need to take control, and who knows if that person will manage the company and its holdings as well as he has. The current president and CEO of the company is David Willits, who was appointed back in November of 2021, and Carl's son Brett is also with the company, and he's been there for more than 17 years. Ultimately, when Carl is no longer able to head his own company, we'll just have to wait and see how his successor will be able to handle the organization. I'm assuming Carl has passed on much of his knowledge to his son, who will eventually have a much larger amount of influence when his father isn't in charge. So in summary, what should our opinion be of IEP? First of all, because it's an MLP, if you're going to make an investment, it would only be worth it if you were to invest a sizable amount in it. If you were to plan on paying an accountant or a tax filing prepper to handle your taxes, and let's say that they charge an extra $50 to $100 or more to handle a K1, then just buying a few shares of IEP wouldn't financially be worth it because the returns you get will be eaten up in paying for an income tax filer. If you can handle a K1 on your own or you don't have to pay extra, then obviously this won't be a concern for you. Secondly, you need to be a fan of Icahn's investing strategy. Be sure to familiarize yourself with his motives and what he looks for in a company before deciding to acquire it. For example, he's well known for being a critic of passive investing and index funds, both of which are things my channel actually revolves around. Thirdly, you need to have confidence in the leadership of the business whenever Carl steps away from his enterprise. Their current CEO has only been at the company for about 2 months, so it's way too early to determine how well David will be able to run under Carl. Given the financials of this company, I'm not exactly sure what Carl's next steps are besides Southwest Gas. As we saw, he's been selling a number of his businesses, which has contributed to decreasing revenue over the years, and on top of that, he's been keeping a lot of cash on hand. This has me speculating that maybe he might be trying to acquire additional holdings besides Southwest Gas, or maybe he's anticipating needing all of this cash for some other purpose. We really just don't know at this time. This continuing downward trend in revenue can't go on forever though, obviously. Alright everyone, that's going to wrap up today's video. Thank you all so much for watching, I really do appreciate it. If this video benefited you in any sort of way, please click the like button below, and click subscribe if you want to see more dividend investing strategy videos. It would just let me know that there's a sizable enough audience out there who wants this kind of content, and I'll continue to provide you all with that content. Alright everyone, thanks again for watching, and I'll catch you next time. Take care.